Hey everybody, it's Paul here from Blossom on my YouTube channel, Better Call Paul. I apologize, this video is a week late. It was requested by one of my followers after my last Battle Royale. He suggested that we do a competition between HHIC from Harvest and CANY from Evolve, as they both hold 10 Canadian stocks and write covered calls on them. So we're going to take a look at these two and see what the differences are and maybe what some of the similarities are. And then I'm going to tell you which one I bought and why. So guys, here we have Harvest's Canadian High Income Shares ETF. Let's check out the overview. The Harvest Canadian High Income Shares ETF offers a multi-sector portfolio that captures a diverse selection of established and trending Canadian companies that are positioned for strong growth. It is designed to deliver consistent, high monthly income alongside growth opportunities. For me, everyone, I'm looking for the high monthly income, and the growth opportunities is like an additional bonus, right? We want to see our portfolios growing, but mostly we want to see it kicking out that high monthly income. The fund focus, the Harvest Canadian High Income Shares ETF, HHIC, seeks to provide high monthly income and growth potential from a portfolio of TSX listed equities that use covered call strategy. The underlying ETFs in this ETF employ modest leverage to create overall leverage exposure of approximately 25% and a high monthly cash distribution for its unit holders. Okay, so guys, you can see over here on the right side, it distributes 16 cents per month. At market close, it was $13.32, has a management fee of 40 cents and a risk rating of medium. Let's just take a quick look at the portfolio breakdown here. We'll take a look at this one. So you can see, guys, this holds Shopify, TELUS, Royal Bank, TD Bank, BCE, which is Bell Canada, Cameco, Canadian Natural Resources, Enbridge, Suncor, and Anico Eagle. Sorry, guys, these are some of the biggest and best companies in Canada, and this will provide a solid performance for this ETF. Now we have Evolve's Canadian Equity Ultra Yield ETF, high monthly income on leading Canadian companies with ultra yield. So let's see here. Guys, you can see that their share price is a little bit higher. The NAV is $25.33. They also hold 10 stocks, but they distribute 21 cents bi-monthly. So instead of paying monthly, it pays twice a month, which is nice. We can look at the holdings as well. So here you can see they have Shopify, Cameco, TD Bank, Canadian Pacific, Kansas City Railway, Royal Bank, Bank of Nova Scotia, Enbridge, Brookfield, Bank of Montreal, and Thomson Reuters. Let's go back to HHIC. I missed this one. So guys, some of the advantages of this is a diversified exposure to top Canadian companies, higher monthly income, you get 25% leverage, a lower purchase price, and a tax-efficient high income. Now with CANY, all right, guys, introducing CANY, Evolve Canadian High Equity Ultra Yield ETF. In Canada, investor demand for ETF-based income solutions is broad, with the ETF market expanding rapidly. In recent years, as investors hunt for yield and diversification. And that's why we're excited about the Evolve Canadian Equity Ultra Yield ETF, CANY. It bridges the needs of investors for equity, exposure, growth, and income. CANY is designed to give investors modestly leveraged exposure of 1.33x to an equal weighted portfolio of leading Canadian equities while using a covered call program to enhance yield. All right, so let's take a look at these lined up side by side. So we have Harvest on the left and Evolve on the right. So tickers HHIC and CANY, CANY. They both hold 10 Canadian stocks. They were basically put out at the same time, HHIC being on August 21st and CANY being on September 11th of 2025. Now, Harvest decided to launch at $12 and Evolve decided to launch at 25. I don't think this really matters, but a lot of people will be attracted to that $12 launch price because it's easier to accumulate more shares. But you always have to look at what's the distribution compared to the cost, right? Current price of HHIC while I was putting this together was $13.32, and for CANY it was $25.25. Now they both use an active covered call strategy, actively manage it. It should say the same thing, but you could call it either or. They're both writing up to 50% of the portfolio. Now, here's a big difference. One of the few differences between these two. You can see that Evolve decided to use 33% leverage. So they went a little bit higher than what we're typically used to, the 25% leverage. They both have a management fee of 0.440 or 40 basis points. Now, here's another difference. So the distribution for HHIC is going to be 16 cents monthly. But again, remember, that's based on a $12 launch price. And CANY is going to do 21 cents, but they're going to do it twice a month. And again, you have to factor in that that's based on a $25 launch price. So we got different distribution amounts and we have different payment periods. So right now, the yield based on cost for HHIC is 14.41%. And for CANY, it's 19.96%. And Harvest lists their ETF as medium risk, and Evolve lists theirs as medium to high. Just so you can see side by side the holdings, right? They both have Shopify. Harvest has TELUS, while CANY has Brookfield. They both have Royal Bank. They both have TD Bank. Harvest has BCE and CANY has Bank of Montreal. I will say I like Bank of Montreal more than BCE. They both have Comico. Harvest has Canadian Natural Resources and CANY has Scotia Bank. I think I prefer having Canadian Natural Resources. It looks like CANY's becoming a little bit more financially heavy with 4 banks. They both have Enbridge, Suncor for Harvest, and Thomson Reuters for CANY. And then you get your gold exposure with Harvest with Agnico Eagle, and CANY went for Canadian Pacific, which is maybe a little bit more conservative and has been underperforming lately, but will probably eventually catch up in the long run because they're not building more railroads, are they? So guys, there you go. That's kind of like the comparison between HHIC and CANY. I like both Harvest and Evolve. I don't think you can go wrong with either or. They have slightly different underlying positions. So, you might be able to make an argument for holding both of these covered call ETFs. If you want, the stability of Harvest having only 25% leverage versus 33%, then you might lean towards Harvest, and Harvest has a good track record. But Evolve has gone, a little bit more riskier with the 33% leverage, but then you are getting a higher distribution rate, a higher yield, and you're also getting paid twice a month. So to start with, what I did was I ended up selling my 1,000 shares of Evolve Bank, and I moved it into Evolve CANY. So I didn't switch from, one fund provider to another. I stayed within the Evolve group of funds, but I just moved from bank to CANY, where I feel I have less exposure to just finances. Now I'm more diversified across Canadian companies, but I'm also getting a higher distribution rate or a higher yield. So I've increased my monthly income. Now, will CANY share price keep up with bank? It's hard to say. So capital gains wise, we'll have to see in the long run which one outperforms the other. But at the time that I sold bank, I was up about 12%. So I did realize those gains. So I think it was a good move for now anyways, and I'll just keep monitoring that for a while. Anyways, guys, remember, this is not financial advice. I'm not suggesting you buy either or of these two. Do your own research, make sure you understand how covered calls work. We all know there's a big debate going on about whether or not they're worth owning, and that's up to each investor individually. So do your own due diligence. Make sure you figure out how exactly they work. Track them for a little while. Maybe buy some to start, and go from there. Anyways, guys, until next time, bye for now.